homeowner who is considering selling their home on their own, something that you do need to be aware of is the risk factor that you are taking on when you accept a buyer. And if anything were to happen to that contract and the buyer were to break the contract, are you able to seek damages? Do you get anything for the time that you spent taking your home off the market to get one particular buyer from offer acceptance to the closing table? Today, we're going to talk about just that. We're diving in to Earnest Money. Hi, I'm Ashley Mullinex, creator of For Sale by Owner DIY, where I help homeowners who want to sell their home on their own do so by providing the support and education that they need to be able to sell their home on their own with absolute confidence, saving themselves thousands of dollars. What is earnest money? Earnest money is essentially a show of good faith money. Typically, on average, buyers will offer 1% of the purchase price of the home up as earnest money, meaning if the buyer doesn't contractually finish everything that they promised in the offer contract that was presented and agreed upon, then you, the homeowner, get to retain that earnest money. This earnest money price is an agreed upon price. So if a buyer tries to present no earnest money or $1,000 in earnest money when your home is selling for $400,000, you can always counter and negotiate this price. Also, if you feel like you're a little bit at risk with the buyer, meaning the buyer isn't fully completed with their pre-approval process, or the buyer is asking for a 60-day close, or maybe the buyer has a contingency to sell another property before they move in, and it's just a high-risk offer, if you want to be able to capture as much liquidated damage as possible, you would want to negotiate the earnest money price point. Instead of, say, your home sold for or your agreed upon list price, sell price was $400,000, and the buyer was going to give you $4,000 in earnest money, but they had a 60-day close or 90-day close. They needed a very long time to get from offer accepted to the closing table. You could ask for $5,000-$6,000 worth of earnest money. Or if you know your mortgage costs you $2,500 a month, you know, a good point of reference would to say, hey, if my home's going to be off the market for 2 months, 2.5 months, I want to be able to get that mortgage payment covered. It might make you comfortable or justify a price that might make you more comfortable with accepting a high-risk offer. Now, the earnest money can go back to the buyer. The buyer's earnest money is protected. So just because the contract breaks does not mean you are automatically entitled as a home seller to the earnest money. For example, during the option period, at least in the state of Texas, that earnest money is 100% protected. So if the buyer had a 7-day option period, within that 7 days, they decided not to move forward with the purchase of the home, in the contract, it states the buyer can retain the earnest money, and all you, the home seller, get as time off market damages would be the option period fee that was also agreed upon during the negotiation period. Another way buyers are protected with their earnest money is a lender approval period. When you look through a contract, there's going to be a paragraph that talks about how much time the lender needs to approve a loan. If the approval period is, say, 21 days, that means that buyer and the lender have 21 days from the date of acceptance to get the entire file cleared through underwriting so it can fund in time for a 30-day close. If for whatever reason you are on day 21 and that lender finds out that they cannot approve the loan, sometimes that can happen if the buyer, let's say, got laid off from a job. On day 21, the lender would say, I can't approve the loan. The buyer is no longer qualified for the loan. And then the buyer's earnest money is protected under that provision. So when you are reading contracts, be sure you read them thoroughly. If you are not sure exactly what it all means, reach out to the title company you vetted before you decided to sell your home. In my course, in my program, I tell you to vet good title escrow officer companies because they are going to be vital to you in all the series and phases of selling your home. A big area where they're going to be very helpful is when you receive an offer and you read through it and you don't fully understand it, you can pick up the phone and call the title office company and they will let you know everything that is being asked of you as a seller. Most times, insider secret, realtors don't understand everything that's being asked in a contract. Guess who the realtor calls? The title company. I cannot tell you how many times real estate agents don't understand deadlines and dates. They don't understand what's being asked. When there's hiccups in the process, they're calling title to say, hey, are my buyers contractually, it says this, can we still obtain that? And it's title who knows the contracts really, really well and who helps the realtors to just deconstruct everything and present it in such a way where the sellers or the buyers understand. So with that being said, reach out to the title company that you had vetted and built a relationship with and have a conversation with them. That way you know you fully understand everything that's presented to you, and that title company will let you know contractually all the ways that the earnest money is protected by the buyer. I hope you found this information very, very helpful and insightful. Always send me a message if you have any particular questions. I'm happy to help where I can. Also, if you're a homeowner who is looking to sell their home in the next month, 2 months, 6 months, maybe even a year out, and the thought of selling it by yourself hasn't even crossed your mind, I am here to tell you selling your home on your own is absolutely easy. As long as you have a compass to guide you from deciding to sell your home on your own to making it to the closing table, I can help you. I have designed a course specifically for that to help you get from the decision of, I want to save thousands of dollars in commission costs to, oh my goodness, I did it on my own with guidance and it was extremely easy and I saved thousands. You could pay off a car with the amount of money that you could save by not hiring a realtor to do it for you. So if you're interested in that, below in the description of this video will be some links. The link is under construction right now, so if it is not repaired yet, just shoot me an email and I will be happy to make sure that I get you a copy of the course. I will see you in the next video.